Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. It's the week of the double F, futures closeout, and also the Fed's Open Market Committee meeting, and where they will announce what's going to happen with interest rates. Joining me, as always, on the show is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi.
I mentioned those two events because they are seminal as to what will happen to the portfolio this week. But before we get to that, I know that you want to start off by looking at the top 40.
Yes, that's it. But you're right, those two events, the futures closeout and the Federal Open Market Committee meeting on Thursday, or the announcement on Thursday evening, very, very important this week. And they have some sort of a bearing on our portfolio. What I'm very glad about this time is that the Fed meeting is after the futures closeout this time, which is unusual because on the previous couple of futures closeouts, we've had a Fed announcement the night before the futures closeout, which has meant that we've come into the office the next morning and the market's gone absolutely crazy in one direction or the other, right into the futures closeout.
Yeah.
So the fact that this Fed announcement comes after the futures closeout on Thursday is actually, I certainly welcome it. And I'm sure many other options traders there in the market, guys that are trying to delta hedge their options book, must also be very grateful because the overnight gap risk following these big Fed announcements is huge.
Yeah, and so that's unlikely to happen, and in fact the market's probably likely to do not very much between now and then.
Well, I think so, and if we look at the chart of the top 40 at the moment, we can see what it's doing at the moment, which is very choppy, but we look at this chart every week just to give it a sort of a bigger picture view of the overall market, and we had this large head and shoulders pattern earlier in the year which broke to the downside, and I still feel like we're probably in a big topping out pattern here, and like I said on the show last week, I suspect that there's a lot of evidence out there which suggests that we might be entering a new bear market now. For the time being anyway, I mean that's bigger picture stuff. If we look at it more on the shorter term basis, our market for now is sandwiched between 41,500 and 45,500. Right now it's bang in the middle of that area, around about 43,500. And the market's been very erratic over the last 2 weeks. No particular direction. It's choppy up and down, very difficult kind of environment to trade. And I think part of the reason for that is that the market is very much in a wait-and-see state at the moment, waiting to see what the announcement is out of the Fed on Thursday night. Yeah. Are they going to raise interest rates or aren't they? And what's the rhetoric going to be? And until we know that, there's kind of a standoffish approach in the market at the moment.
Yeah, I mean, it is somewhat ridiculous, but that's what it is, and that's what you've got to trade. Garth, how, of course, does this all feature or influence the put option structure that you initiated for the portfolio quite a while back?
Yeah, so this put option structure of ours will expire with the futures closeout this week, Thursday. It was constructed with the purchase of a 46,000 strike put and the sale of two out-the-money put options, a 42,000 and a 44,000 strike put. Now, the profile, the payoff profile of this diagram of the structure is on the screen there at the moment. Between 42,000 and 44,000 is where we make our maximum profit of 16,500 Rand on this structure. And right now, the market's trading at around about 43,500, so we're right in that profitable zone at the moment. So our mark-to-market profit is 16,500 Rand right now. So it's certainly looking good. We've got 2 days to go until futures close out. But just keep in mind also, we did go long of 2 contracts of the IG top 40 CFD last week at 44,120. And I did that in an effort to kind of lock in some of the profit if the market was to rally, but now it doesn't look like that's happening. So we'll see where things end up. Look, that long CFD position, the top 40 CFD, is a small position, and it does have a stop loss. So if the market starts to trade a lot lower, then I'll close that out, and then our option structure effectively takes over. But as things stand right now, we're actually looking in a very, very good place, by and large.
In fact, you don't actually want the market to go anywhere between now and Thursday.
If it can stay at 43,500 for the next 2 days, or even if it goes a little bit lower, that's fine. Just around these levels would be perfect because that's where our option structure makes its money.
And the likelihood of that, as we've already said, is quite high. I mean, you said there's not much optionality in this week's futures closeout. Perhaps you can explain that.
Yeah, there's not a great deal of option interest in the market around current levels. There's a fair amount of open interest up at 45,000. There's some puts up at that area. And then only down at towards 42,000, there's a little bit more open interest down there. And in between those two strikes, there's a bit of interest here and there, but it's really not that significant. So be that as the case is, it doesn't suggest that we're going to see a great deal of optionality driving the market in the next few days ahead of the futures closeout. I don't think that influence is going to be there.
Yeah, okay. So in a way, you're quite lucky that, that the Fed meeting is on Thursday night, as we've said. So, I mean, all things as they stand, it might work out incredibly well, and it would be really nice to see one of these option structures actually pay off.
Well, it would be, because this is part of my strategy for how we're going to work a bear market, and is to do these options type of structures. So we've got this one's looking good, and the one that we did previously, one of the two that we did previously, actually also worked. So certainly it's starting to show that in the right type of market environment, these put option structures do work.
Yeah, in that context, Garth, I know you want to bring up a chart of the industrial index, and there's certainly a lot more talk now about, have we entered a bear market? Are we entering a bear market? Why is the industrial index for you key at this point?
It's key because the industrial index has really been the darling of the market. Throughout this bull market from 2009 until now, it's been an industrial and financial driven bull market on the JSE. The resources haven't participated at all. In fact, resources have been in a bear market.
Yeah.
But the industrial sector has been incredibly strong, and it's always had upward momentum on its side. And now, for the first time in this bull market, we're actually starting to see the market really making lower lows and lower highs. And you can see that 50-day moving average over there, which is that light blue line, has actually rolled over and is now pointing convincingly downwards. And also, what is notable is the fact that industrial index has broken below that lateral support line. Now, that comes in at about 65,000 on the industrial index. We've now broken below that. And the market has rallied up, but it looks to be forming a rising wedge. And it's started to break to the downside of that structure. Now, those rising wedges are typically bearish continuation patterns within a downtrend. And they usually do break to the downside. And it often results in a retest of the recent low, and if not another move even lower. So for me, this is significant now, because it's telling us that the leading sector of the market has also started to falter. So that's important to note. And yes, you say there's more and more commentary coming out about, is this now the start of a bear market? What's very, very different this time is, on this significant pullback that we've had in our market, it's no longer this tone of just buy the dips. It's not like that at all. The tone is a hell of a lot more cautious. And it certainly feels very different this time around to any of the prior sort of corrections that we saw during the last 6 years.
Yeah, Garth, I believe you've been criticised for being quite bearish, although, I mean, you're certainly not alone out there.
Yeah, look, the thing is that on this show, we trade what we see. So, we've been in a bull market for the last 6 years. Since we started Traders Corner, it's been a bull market. So by and large, I've traded it as a bull market. Yeah. So you should. As a trader, what you need to remember is that you don't have any influence over what the market does. The only thing you have influence over is how you behave in accordance with what the market's doing. So in a bull market, I'm going to treat it as a bull market, and I'll trade like a bull market trader. If we're in a bear market, then I'm going to change my strategy, and I'm going to look to employ more bear market type strategies. We're going to look to use more put option structures. We're going to look to be going short more often. So the point is, I'm adapting to the market that I see. And you have to, as a trader. Don't be one-dimensional in your thinking. Be adaptable to what the market is doing.
Yeah. Okay, well, in that context, the position that you put on for the portfolio this week or over the last couple of days is a short on SAB Miller, and we did discuss it last week, so you were eyeing this as a potential short. So what convinced you to go into this trade? Yeah,
the viewers got a good heads up last week that we were watching this. So just to recap the chart, there it is at the moment. Now, what got me interested here was a couple of things. First of all, the stock has broken convincingly below that upward trend that I've drawn onto the chart there. That joins all the lows since early 2014. Also, what is interesting is that we had this trading band between 630 Rand and 680 Rand. And the stock oscillated up and down between those levels. Now it has broken convincingly below the bottom of that range. And that, strictly speaking, opens a move down the height of that range. You project that distance down, and it gives us a target of around about 580 Rand, as you can see indicated by the arrows over there. So what I want to do now is just zoom in on that more recent area of trading, looking back over the last 4 months effectively, and just show you more clearly what we're seeing there now. So if we do that, you can see the trading action enlarged on this graph. There you can see that uptrend, which indicates the uptrend that has been broken. That was the uptrend that goes back to early 2014. What's happened recently is the stock did get hit very hard, and it's now rallied up, and it's made one of these rising wedge patterns, very similar to what we saw on the industrial index chart. And you can see that that has started to break to the downside. Now, what I said on last week's show is that we would look for a reversal from this 640, 650 sort of area as a signal to go short. And we did get that reversal earlier, well, last week, towards the end of last week, actually. The stock reversed down from 640 Rand. And I then put on a short at 633 Rand. And I'm putting my stop loss fairly loose. It's at 650, so a convincing move above 650, I would cut this trade. But certainly it seems to be working fairly well at the moment. The stock has broken to the downside. It's been trading down close to 600 Rand today. So this short trade is working nicely for us. Okay, and all right, so in greater detail then, Garth, if, especially given where your target is for this trade. Yeah, so we're looking at, well, we've gone short at 633 Rand. I did this trade last week already. The stop loss is 650 Rand. The risk per share, therefore, is 17 Rand per share. I'm risking only 1% of my capital here, and we had about 357,000 Rand in the account at the time, so 1% of that is 3,570 Rand. I take that capital risk and I divide it by the risk per share of 17 Rand a share, and that gives us 210 shares. So I've rounded it down slightly to 200 CFDs, just to keep it a nice round figure. The target that I'm looking at here is 585 Rand for the move down. It gives us a risk to reward ratio of 1 to 2.82, and the exposure that I'm taking here, therefore, is 126,000 Rand that we've gone short of SAB Miller. Yeah. And it's quite interesting because SAB Miller, in a way, is representative of the industrial index, isn't it? You know, it's one of the stocks, so it's not, I suppose, untoward to see the industrial index and SAB Miller itself almost mirroring each other. You see, SAB Miller, being such a heavyweight stock in our market, does hold a very heavy weighting in the industrial index. But there are other stocks there as well, like Richemont and Naspers and what have you, that also make up a very heavy weighting. But it's not a great surprise to see that SAB Miller and the industrial index chart do follow a fairly similar formation. Okay, so the target there, as you said, is 585 Rand. We're sort of scratching, well, you seem to be headed there. Nice to get a trade that sort of starts working out the moment you enter it. Yeah, it is. The best trades that I find are generally ones that work off the bat. If you go into a trade and it starts working for you immediately, invariably that means you're onto something good. And the reason for that is because it obviously means that there are other market participants out there in the market seeing the same opportunity that you are, taking advantage of it, and then it kind of becomes a self-fulfilling thing. Yeah. So it is, in my experience, it's very much the case that your best trades usually work out fairly quickly. Okay, Garth, so then taking this all into account, what does the portfolio look like? It's looking good. We're at a new high for the year. We're up 45%, 363,000 Rand almost. So that's 113,000 Rand of profit for the year to date. Those are all the trades that we've got open at the moment. We've got our option structure where we're making our 16,500 Rand profit. We've got a long position on the IG top 40 CFD where we're losing some money there, unfortunately. And then this position on SAB Miller is 5,700 Rand in the money already for us this week. So, I mean, the next 2 days are actually going to be a little bit nail-biting, only because I suppose you want that put option structure to work, not because it's because you've traded against your positions as you have in the past, where I guess lessons were learned. Yeah. Also remember, though, that this long position on the top 40 that we've done against that option does have its own stop loss. Yeah. And it's a fairly small position as well. So we're not going to get badly hurt, whatever happens there. Garth, you must be pretty chuffed with that 45% gain year to date. I mean, that's in the context of the overall market, that's phenomenal. Yeah, really. I'm very chuffed. What I'm particularly chuffed about is the fact that the market has started to take a far more bearish tone recently. And that is required a different style of trading, and we've adapted successfully to that different changing environment so far. That I'm particularly confident and happy about, because in a bull market, it's quite easy to make money.
Yeah.
In a bear market or in a difficult, choppy type of market like we've had, it's not so easy. So that I'm particularly pleased about.
Yeah, well, I mean, the next 2 days, as I say, we'll watch with nails bitten. Garth, we have to leave it there. As always, thanks for joining us. Garth is founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.